My name's Steve Gaylord, and I'm the CTO at Stock Solutions. One of the things that we do is we focus on assisting stock administrators in solving their problems. One problem that we'll be talking about today is the issue with the $100,000 rule as it relates to a restricted stock release and paying taxes within a 24-hour period. I think it's actually one business day. If you have an employee that will hit that $100,000 rule, it is your responsibility to pay the taxes to the IRS. The issue that comes into play is how do I know and estimate out what the amount will be prior to actually performing a release? You typically need to estimate that out a few days prior to get your payroll department or whoever the department is that will be paying the IRS prepared to actually deal with the funds. We have put together a stock administration release estimator for this particular problem. It can take in your particular data as it relates to the particular accounts and information necessary for the future stock release. It will then generate a spreadsheet that you can use to actually perform some what-if analysis. If you think your stock price will go up between now and the time you do the release, the actual spreadsheet that is generated allows you to change that and will help you estimate out the taxes every particular release will hit, as well as take into account the taxes that have been paid up to this point to determine who, if any, will be hit by this $100,000 rule. So then you can prepare you and your other departments to pay the fees as appropriate. Now we will go into and show you the tool itself. Thank you.
So now we're going to go through the tool and give you an example of how the actual information passes through the RSU release estimation tool and provides you that what-if scenario kind of document or spreadsheet. The first step is to generate or load in the source data that will be necessary. The information you need to load will be related to payroll summary information. So what information in summary are you going to be putting out for this particular release? Different equity systems will handle this differently, and the data will come out differently. The tool is actually made up into two separate components. I am currently showing you the first component, which is the actual component that pulls in your source data. It could be from a database, it could be from flat files, could be multiple files, could be single files. In this scenario, we're going through a process that pulls in information from flat files. We just pulled in some payroll release information. We're about to pull in an account tax information, which tells the system which particular account record, how much taxes have you currently paid up to this point in time, because we're after finding out if we're going to hit that $100,000 rule or not. Finally, we need to know which shares are going to be released. So if you're only going to have one share released, that obviously has a different impact than if you're going to have 100. The tool then tells us that the source data has been loaded and is complete. The next step is to move into the actual pre-release tax estimator. This is the actual tool that will pull the data that we just placed into what we call our interim database. It's sort of an entry point or a middle piece from your source before the actual tool, allows the tool to know what type of information we need, and allows us to be able to map different source data components into a defined data set that the tool can run with. The first step allows us to configure our taxes. This gives us the ability to generate and tell the what-if scenarios spreadsheet what order you'd like to see your taxes. We also have to configure the system to tell it where that database is. As you can see here, I have a directory on my system that points at my interim data source. So we have to configure those two components. Once those are complete, step one is to tell the tool to pull the necessary data from that interim data source. And you can see here, it's going to tell you what do you need to do. We customize this screen to remind clients what they need to do and prepare the data prior to the estimator executing. These next few screens are standard screens that Access will tell you when it's pulling data from another data source. And the final one was the data retrieval was complete. So now we have all that data necessary. If you were going to be running for a new release, you would do the same thing. You'd have a different set of data. You tell the tool to pull in that new set so that you could estimate for that future release. The next step in the process is to actually take some of the year-to-date tax information that was pulled in by the account records and some of those other fields, such that the tool can know how much tax you've paid up to now, so that it can help you estimate out if you're going to hit that rule and who you're going to hit that rule for. Finally, we tell the system to generate the what-if scenario. The first step it goes through is it actually has to manipulate some of the data that's been pulled in to get it into the necessary structure for displaying in the spreadsheet. The spreadsheet that will appear here in a minute will have all the information about the releases that you will be releasing in the upcoming action. It will also maintain the different taxes that are loaded into the data. The purpose of this is going to allow you to estimate out if your stock price is going to hit, say, $4 or $5 or $12 or whatever it may be, and will calculate those taxes based on what that estimated information is. As you can see, a spreadsheet has appeared with all the different information that we loaded from those original source files. You can see that in the top, there is an estimated market value, which is currently set to $3.88, and then all the information here is calculated based on that particular market value. The tool or this resulting spreadsheet is set up in such a way that you have the ability to change what that estimated market value would be. If you think that the market value is going to be $25, you can just change 25, and as you see, all of the related information, the value of releasable shares is going to change because that market value is different. The tax information for this particular release will be different, and it is all recalculated for you. As we slowly scroll to the right, you can see that when I change that, the tax amount changed. In this particular scenario, we have just loaded some dummy data, so you can see that everyone has paid $123 on every single tax. But you can see that there is an actual calculation that takes place to generate, in the first line, $204 of tax, including what they have currently released and this particular release. So this would be the column you would look at to see if you have an individual that's going to hit that particular limit, and you can estimate out how much tax you're going to need to pay the IRS within that 24-hour period. One, this allows you to sort of pre-estimate what's going to happen, and probably the most important piece is it allows you now to work with your payroll department to figure out how that's actually going to work and how you're going to get the money to the IRS. So in general, that is the purpose of the RSU Release Tax Estimator from Stock and Options Solutions. Hopefully this will show you a very easy way to solve a could-be complex problem. So please, if you have any more questions, contact us at sos-team.com, or feel free to call our main number at 408-979-8700. Thank you, and looking forward to hearing